A whole host of mid-caps reported their performance for the third quarter as well. Vivek Iyer joins in with a wrap on a lot of these numbers. Vivek.
Well, in the midst of a very hectic earnings season as far as Q3 is concerned, quite a lot of the stocks that we are highlighting were quite active in today's trading session. First on our list, Amber Enterprises. The company, however, while it missed analyst expectations as far as the gross margins were concerned, the fact that the con call, the company managed to highlight quite a few important facts and giving a reasonably good guidance was something that saw this stock make quite a bit of a sharp recovery. So revenues went up almost 38% on a year-on-year basis, EBITDA up 5%. However, margins saw quite a bit of a sharp contraction, coming in at 5.8% versus 7.6% on a year-on-year basis. Profitability coming in at 15 crore versus 33 crore on a year-on-year basis. What the management did say in the conference call was that the company would maintain an absolute growth of EBITDA by 30% in FY24 and FY25. Coming to Supreme Industries, while the numbers on a year-on-year basis were a bit of a dampener, the management did say that as far as prices are concerned, the prices have bottomed out and the company has actually managed to take quite a few price increases in the current ongoing quarter. Net profit was down 14.5%, revenues up almost 18.5%, margins coming in at 13.1 versus 16.3% on a year-on-year basis. UCO Bank, in line with the strong results that most of the PSU banks have delivered, this company too delivered a very strong quarter. NII up almost 10.7%, net profitability coming in at 653 crore versus 310 crore on a year-on-year basis. Net NPA as well as gross NPA too contracting both sequentially as well as on a year-on-year basis. Lastly, Chalet Hotels, this particular stock saw a very sharp up move in today's trading session on the back of very strong results. Profitability of a little over 100 crore versus the loss seen last time around, and revenues up almost 75% on a year-on-year basis.
All right, with that, let's move on to a special now. CNBC-TV18 has compiled a list of the top 20 stocks to watch out for this year. It's a carefully curated list of companies that warrant a closer look in 2023. Prashant lists them down.
Well, today we bring to you CNBC-TV18's top 20 stocks to watch in 2023. This is a list of companies which our research team has on their radar, and you should too. Each of our research analysts will present the ideas over the next few days. What am I here to do then? Well, I'm here to give you a sneak peek into the list. Well, first up, let me say that this is not a recommendation list. This is a list of companies which have meaningful triggers lined up this year. Positive or negative, but meaningful catalysts. Over the next few days, we will put out these names in detail and explain what could change and what the impact could be. Well, let's get started then. Sonia has Maruti on her watch list. Maruti, remember, has lost market share due to elevated competitive intensity, lack of new models in the UV category, and production constraints. With a slew of product launches this year, will all of this reverse? Ekta is watching Apollo Hospitals. Will the delayed Apollo HealthCo's fundraise finally fructify? It's been long awaited. A fundraise in Apollo HealthCo is important to ease out cash drain on the core business. From the oil and gas space, Sonal has her eye on two names. First is Reliance Industries, which will see the ramp-up of its FMCG business, the launch of air fiber for wireless broadband, and new affordable 5G smartphones to monetize its pan-India standalone 5G network this year. The second one Sonal is watching is ONGC, where the bet is that higher oil prices bring greater confidence in the predictability of ONGC's earnings and perhaps supports a re-rating. From the tech and telecom space, Rima is watching Bharti and LTI Mindtree. Now, Vodafone Idea is the catalyst for telecom. It needs a capital infusion or it needs a massive tariff hike very quickly to keep its head above water. Either way, it's likely to be closely watched by the leader, that is Bharti, and that is what Rima is watching. On the IT services end, Rima has her eye on LTI Mindtree. From the media space, consolidation seems to be the name of the game. Vahishta is keeping her eye on PVR. Upside synergies are possible as the PVR-Inox merger plays out this year. And with Sony in the driver's seat, the question is, will Z Entertainment see synergy benefits, improved governance, and sharper content creation across platforms? Will the cement space see consolidation this year? Nigel believes it could. He has two names on his radar, Orient Cement and Sagar Cement, two names he will watch out for. In the FMCG space, Mangalam is watching Colgate and whether the CEO, Prabha Narasimhan, who has been at the helm of Colgate for 6 months now. Will she be able to arrest Colgate's steady market share loss and drive its diversification agenda? He also has an eye on Container Corporation, which is a privatization candidate. Now, insurance has had a tough few last years. My colleague Surbi will keep an eye on HDFC Life from the space, as new regulation by IRDAI has an impact on market structure in 2023. Will HDFC Life emerge as a winner? From the infrastructure space, will NTPC emerge as a key play on India's entry into the global green hydrogen market following the government's launch of the National Hydrogen Mission? And will L&T be able to turn around loss-making businesses and benefit from the government's continued thrust on infrastructure build? Vivek has both NTPC and L&T on his radar. In the banking and financial services space, Abhishek has 5 names on his radar. Bajaj Finance had a rare down year in 2022. Will it get back to its winning ways? With the government looking to sell a near 61% stake in IDBI Bank, this is the second stock that he has on his radar. Next two are merger situations. First is the banking behemoth HDFC Bank, which is set to see the home loan giant HDFC merging into it. Then there is the merger of IDFC First Bank and its ultimate holding company, IDFC Limited. And the last one Abhishek has on his radar is Paytm. Will Paytm keep the promise of turning profitable in FY24, and will markets come to accept it and show it some love? Well, as I said, these are the 20 stocks which Team CNBC-TV18 will watch out for in 2023. Our team will present each of these ideas in detail over the next few weeks. I want to reiterate once again that this is not a recommendation list, but merely a list of companies which potentially have triggers and catalysts lined up this year.
Prashant, thanks a lot for that. In fact, over the next 1 month or so, we will be talking about each of these stocks in detail, the stocks to watch out for. But with that, we move on to the last headline of the day. Crude oil prices, they continue to inch higher. As they say, crude oil is on the boil. Brent crude is trading close to $80 to about 10 days ago, and now it's closer to $90 per barrel. Strong demand outlook from China continues to keep prices higher. Many brokerages have predicted oil prices to actually hit the century mark in the near term as well. Manisha Gupta standing by with all the details on that one. Manisha.
Well, the crude oil prices have turned positive for 2023 and are trading at a 2-month highs, taking support from the fact that IEA and OPEC, both in their outlook reports, have suggested that the year could look at very strong demand. 2.2 million barrels per day is what OPEC believes, and IEA says that you could be hitting a record everyday demand as well going forward in the second half of this year. The China traffic, because of the week-long holidays, also bodes well for the price rise. And then the street is also watching out for the European Union G7 price cap on Russian gas, which comes in force on 5th of Feb. Ahead of that, there is jitteriness into the markets. Also, the European Union is trying to put a curb or an embargo on Russian oil by sea imports. That is something that the street also is keeping an eye on. The economic concerns, in the meanwhile, the weak economic data is something that also is keeping up prices in check. The markets does believe that it is going to be between $82 to $90 a barrel that the Brent prices will trade for this quarter.
All right, Manisha, thanks a lot for that. With that, we're out of time on this edition of Markets Today. But before we go, let's take a look at what market experts expect from the upcoming budget.
I would rather look at the extent of fiscal consolidation in this budget. According to us, the fiscal impulse has been very strong over the last few years. Now it's the time, in a cyclically adjusted way, to adjust for this fiscal impulse to be lower.
That commitment towards fiscal consolidation, getting it down in that 6 or below 6 handle, and continuing with capital expenditure, and not seeming therefore too populist. So if you concentrate on capital expenditure, you will be allocating less towards the populist schemes. That will be important in terms of as we look into FY24.